The following is an update and technical analysis on NG natural gas futures, one of the largest components to the energy markets based upon the daily round. And in my previous video, I had emphasized the critical importance of bull traders and or long traders defending the bottom of this primary reactionary uptrend line correlated with the 253 price major monthly interval price support called a dual line of inflection points that moved to the upside was netted with 11.17% in gains on a big move to the upside, re-challenging what I have now added a minor primary reactionary downtrend line off the early stages of August reactionary highs here, correlated now with the 200-day moving average. We were rejected pretty impulsively right off that key pivotal inflection point, correlated with the 382 fibs retracement, 278 price resistance, and we were rejected again multiple times, where we ended up temporarily breaking out of that range, tapping the top of this primary trading range, rejected impulsively, consolidated briefly, and then once again was rejected in a false breakout move on a retap at the bottom of the primary trading range and or channel, and then impulsively had a nice clean violent followed by a very aggressive bidding to the top of the trading range for 16.7% in gains. The wild fluctuations within this commodity cannot be ignored. It'll be your best friend or rip your head off with just the massive amount of beta in both directions. And that's why traders love trading the Widowmaker. Here we are closing on top of the 50-day moving average right below. We have put in, and I had mentioned in that description of the previous video, I had top of this primary trend range. We do have a nice clean bearish divergent high with multiple indicator negative and bearish divergences on all four technical momentum indicators. And that is just playing out as of now. Whereas you have this sort of a symmetrical triangle pattern that could be the wedge in the underlying next additional move if and when we go on to either break above it or break below it. We could have some sort of an additional selling and retest the bottom of the range correlated with a wedge consolidation phase, and then ultimately either waiting for the breakout, nice daily solid candle close breakout above, or a solid daily red candle close sell signal below, correlated with the 236 fibs retracement and the 253 price support, and then ultimately taking out the bottom of this primary uptrend line, reactionary uptrend line, correlated with the primary trading range. And that could spell for a major sell signal or a major breakout off this symmetrical triangle wedge pattern. And I believe that will underlie the next current move. Whereas you have the stochastics 1033 price support honing in on a potential bearish crossover here. And we, as you can tell, have just entered that selling signal there as an early indication crossover. Something to keep an eye on. Again, just one of the early indicators that I have. If we do additionally just sell off, undercut the 50-day moving average, and then ultimately retest the bottom of the trading range. What is more significant within the price action is that these bounces, once again, are getting smaller. Counter snapback, counter trend rallies are coming with lower chops. And if we, again, have another retest where we don't even retest the primary trading range, that's going to be bearish if the chops are just even lower, not even retesting that primary downtrend line, and then ultimately breaking down for a great risk-reward ratio short trade setup to the downside if and when we go on to retest that. Bull traders, if they take out, long traders take out the 382 fibs retracement, the 200-day moving average, and the primary downtrend line, called a triple line of inflection points of resistance. Initially want to take that breakout to finally recover that major triple transitioning point of resistance to re-challenge the 50% fibs retracement, called 346 price resistance, and then again retesting the top of this primary trend range in a prolonged, more of a healthier pullback in a continued uptrend and continue the momentum of an early stage move of a much larger sustained uptrending rally to the upside, then ultimately re-challenging the negative and bearish divergences that were coming to place here. And I believe a breakout above this key inflection point and retesting the 50% fibs retracement will start to eke out these negative and bearish divergences, turn over the moving average convergence that has just been consolidating violently amongst its zero line threshold, spurring health back in these technical momentum indicators, and then ultimately re-challenging the 50% fibs retracement, maybe not even putting in an additional divergent high, if not exaggerated divergences, but a nice solid breakout above and retesting a healthy pullback, back test of resistance to the top of the primary training range, which is sustain health right back into these key momentum indicators and more than likely keep the uptrend rally intact on natural gas.